Hello and welcome to another edition of The Wire. This one's on making tax digital for income tax and what you need to know. I'm joined today by some very helpful colleagues who I'll introduce you to in a minute. But just before we start, a little bit of housekeeping. So you'll be able to download your CPD certificate when you have watched enough of the video. We do have some colleagues answering questions in the chat, so please do post your questions into the chat and we'll try and answer as many of those as we can at the end of the session. We'd also like you to do a short survey at the end of the session to make sure that we've got some good feedback of how we've done today, and also for you to suggest any possible themes or subjects that you would like us to cover in future webinars. So please do take some time. We'll remind you at the end of the session today to do that survey. Just a little bit of housekeeping. We'll go through the disclaimer. So any information that we provide for you will of course be based on the information provided in the question. If we do mention any legal issues, they can't be considered legal advice. And as always, you, the individual, should use your own skill, knowledge and judgment when you're making use of the information provided. So without any further ado, I'll hand you over to Candy Richards from the Federation of Small Businesses. So over to you, Candy.
Oh, thanks so much, Sam. Hi, everyone. I'm Candy Richards from the Federation of Small Businesses, or you might hear us called FSB for short. We're a membership organisation for sole traders and small businesses. We've got a community of about 500,000 small businesses, and we represent the 5.5 million small businesses in the UK, lobbying for change, providing lots of membership benefits that I'll probably touch on a little bit later, and working really closely with our fantastic members, which brings me very swiftly on to talk to you about what we're going to cover in the webinar today. So you've probably heard references to making tax digital, and you're probably logging on wondering, okay, so what does that mean for me? So today I'm joined by Polly Lee from Leap Accountants and Dan Brown at Smith and Pinching, and they're going to cover all the stuff you need to know about making tax digital, how it will impact you, crucially, what you can do to prepare, looking at financial planning and actually making sure that you're as tax efficient as possible, and some of the resources that are available to you also through FSB membership. So I'm going to hand over to Polly, and Polly's going to do all that sort of need to know information about making tax digital. Dan's going to do, like I said, some information on being tax efficient, but then we do have time for questions. So as you're listening sort of to Dan and Polly, think about those burning questions that you've got and make sure you're using the Q&A to pop those questions in. We'll cover as many as we can, but if we don't get to your question today, feel free to reach out either to myself, Polly or Dan, either by email or actually through LinkedIn. So Polly, I'm going to hand over to you now.
Right, brilliant. Thank you, Candy. Hello, I'm Polly Lee, and I own a company called Leap Accountants that's based in Peterborough. We look after a lot of small businesses, a lot of company accounts and clients as well. And I think I'm going to talk you through what making tax digital means, either for you as a sole trader or what it doesn't mean for you if you're a limited company. So the things I'm going to cover is what exactly is making tax digital, who and when does it apply to, when it applies, when it might impact you, what the qualifying criteria are, because it doesn't apply to everybody, what options you might have to either delay, circumvent it or avoid it, what software might be relevant for you, and even the software that we recommend, and then an option to ask some questions at the end. So Making tax digital was an incentive that was originally talked about by HMRC about 5-6 years ago, and every year it got delayed. Essentially, it's HMRC's move to improve our green, environmentally friendly footprint, to do away with paper record keeping. It's aiming to help sole traders like you with budgeting for your tax, and ultimately it is to get more timely information to them. So what it involves is making sure that you're keeping all of your accounting and your records digitally. So I'll cover what kind of software that might support that a little bit later. But also it needs you to report your accounts and your profitability on a more regular basis, rather than trading for a good 12 months and then add another 9 months after that doing your tax return, because by that time you'll have forgotten what you've done, and you'll have to struggle to piece together the information to do your tax return. Who it applies to? It applies to sole traders and landlords. And if you're both, then it will apply to you as well. Who it doesn't apply to is it currently doesn't apply to partnerships, and it currently doesn't apply to companies. The process involves logging in through your government gateway, setting up an MTD account, and enrolling with HMRC. Then you need to keep all of your records from April digitally using software, and keep your bookkeeping up to date. So rather than just ensuring your records are kept digitally and doing nothing with them, you need to make sure your bookkeeping's up to date, i.e. you've taken a receipt from Shell and you need to tell your accounting software what that receipt is. So that's kind of what we mean by bookkeeping. And then you need to do 4 mini tax return submissions to HMRC. So that's one every 3 months. In addition to that, you need to do one final sweep up tax return submission, which is due on your usual deadline. So if everything was working really smoothly, you would have 4 tax returns, and then you add them together and do one final one. In practice, you probably will have 4 plus some adjustments before you do your final tax return. And just a key point is this MTD incentive is about how records are kept and how tax is reported, but it's not really a new tax. It is a little bit inconvenient because learning anything new is always going to be a bit inconvenient, but ultimately it's something that we're going to all have to adhere to. So next, who is going to be impacted? So we discussed that it was sole traders. Now, if your tax return for the 24-25 tax year that you have just submitted, which was due the 31st of January 2026, if the income, so it's important to note that is the income, not your profit, is more than £50,000, then you are captured by the Making Tax Digital rules, which means that from April 26 in 2 months' time, you're going to have to make sure that all of your accounts are kept digitally and you start making those quarterly submissions. So it applies to sole traders. So if you're an electrician and you might have some rental property, then what you'll need to do is add those two together to determine whether you meet that £50,000 income criteria. It's also important to note that it's annualized income. So let's say for 24-25, you only started trading and you traded for 6 months, and your income from your new sole trade business was £40,000. So at a glance, you might think, oh, £40,000, that's under the 50, I'm not captured. However, the taxman looks at annualized income. So they'll say £40,000, that was only trading for 6 months, annualize that over the full 12 months, £80,000, yes, you're captured. Now, the next thing is, even if your income for the 24-25 tax year is under 50, the threshold for next year goes down to 30. So if your income is, say, 40, you've then escaped having to register for MTD from this April 26, but you will need to register for MTD from April 27. And then the year after that, it drops to 20. And I suspect that ultimately HMRC wants everybody to start using MTD because they get the information a lot sooner, and it's, dare I say, it's a little bit big brothery. And ultimately, I think companies will be captured by this as well. Now, a couple of examples that I thought I'd put through is, let's say you're an electrician and you have business income of 45,000, and then you have a buy-to-let property or 2 buy-to-let properties, and the rental income from those properties is 8,000. You have to add those together to test whether you've exceeded the £50,000 threshold. And both forms of that income must then be reported under the MTD quarterly reporting. However, let's say you already have a job. Let's say you work for Mears as an electrician, but you're moonlighting and you've started your own sole trade business as well. And then you only need to look at your sole trade business because the PAYE income is completely outside the scope of MTD. Now, next is considerations of how people have either pushed, delayed, or kicked the ball further into the future to avoid registering for MTD. So one is, we have had quite a few clients form limited companies, and that is something that is an option, but there are certain things that you need to think about as well, because at the moment, as a sole trader, all you need to do, your legal requirements are to do 1 tax return once a year. It will soon be 4 mini tax returns. But as a limited company, you have to do a company tax return. You have to do a company set of accounts that goes on company's house. You have to do a confirmation statement. You have to verify yourself as a director. And if you're taking money out of the company, you also do have to do a personal tax return. So you're not sort of making your life much easier by forming a limited company. You're just kind of pushing the ball a little bit further into the future. Now, another option that people might consider is forming a partnership. So it could be you and another electrician mate forms a partnership. You and your spouse might form a partnership. However, HMRC have said that unless something has changed to trigger a commercial reason for you to form a partnership, then that is not a valid reason to avoid MTD. So one of the examples that the advisor at HMRC used was, you're currently a sole trader, but let's say you went through a divorce or you went through a marriage. Then in that instance, something has changed which has triggered you to become a partnership. So that would then be a valid and justified reason. There are a couple of other things that they've said would mean that you would be exempt from registering for MTD. One is digital exclusion, and the examples that they used were disability. You physically are unable to use digital software. Age, I presume you're either too old or infirm to kind of use digital software. Lack of internet. The example they used was you lived in the Outer Hebrides and there is no physical where you can access the internet, or religious grounds. I don't know what religious ground might prevent you from using digital software, but that is one of the qualifications they cited. And insolvency, if you've either becoming bankrupt or otherwise insolvent, then you won't need to register for MTD. Right. Software. So the biggest softwares that you might already have heard of, and quite a few of you will probably be using, are Xero. Now, Xero are doing a really, really good special offer. It's 90% off for 6 months. I don't work for Xero, so that's nothing to do with me, but it is a really good software, and I would highly recommend that. Use the Grow or the comprehensive options rather than the very basic one, because that doesn't allow you some of the functionality. QuickBooks is good, quite a few bugs, but fairly inexpensive as well. You've got a real person to talk to if you have any issues, and it's a very user-friendly as well, slightly more user-friendly than Xero. Now, Free Agent is quite often free if you bank with banks like NatWest or Metal. So that's becoming a lot bigger. And also HMRC have said that you are able to use bridging software for now if you are using Excel or Google Sheets. So if you're already using Excel or Google Sheets or some kind of spreadsheet to look after your books, you can continue to use it, but you need this other bridging software to bolt on before it can file your tax return to HMRC. But if you want to see what kind of software is compatible, then just write down or click on this link, and HMRC have a big list of all of the compatible software. Now, just a note of caution or consideration is that once you have enrolled into MTD, you can't opt out for 3 years. So let's say in year 1, you've opted in because your income was 52,000, but then in year 2 it fell to 10,000. You can't then opt out even in year 2. However, if your income was 10,000 for another 3 years, then you can opt out after the 3rd year. So that's something that you need to think about. Once you're in, you're kind of in, with the exception of you're either ceasing to trade or you've sold all of your properties, and therefore there's no more property or sold trade income that needs to be reported. I think that was it. Some questions, but also some tips. So a couple of frequently asked questions were, I've had a look at, let me read this out. So I've had a look at my QuickBooks, and currently I can't see how to submit my Making Tax Digital submission. So QuickBooks and Xero are still developing the software. There's quite a few accountants that are in beta testing, but they have assured us that it will be ready for use from April. Another question was, if you have buy-to-let properties or a portfolio of properties that you share with your spouse, then only your share needs to be tested and reported under MTD. So let's say it's not a 50-50 share. You and your spouse own a portfolio of properties and it's a 90-10 split. Your share is over 50 and their share is under, in which case they won't need to report under MTD, but you will. So that's something you need to consider and think about as well. There is free software as well. Zoho and Quickfile are currently free software. You might want to have a look at those, but some accountants don't support them. So that's worth checking with your own accountant. HMRC have also said there's going to be a soft launch for this coming year. So whilst there are no cash penalties for non-submission or late submission, they have said that they're going to rack up points. And if you continue not to submit or to submit late, then those points next year might result in them looking at your account a little bit closer. They haven't said what's involved or how much closer, but at the moment there are no cash penalties, but I would urge you to make sure that you are compliant as quickly as possible. I think that's it for me. Thank you. Thanks, Candy.
Perfect. I think
Thanks,
it's now.
Polly. So we'll move now on to Dan's element of today, which is going to sort of look at financial planning. But we've got lots of questions coming in through the Q&A, and we are going to look at those after Dan's session. So keep posting your questions, and like I said, we're going to get through as many as possible. And if we don't have time, we will sort of try and sort of catch up with you, or you can email us after the webinar so we can make sure that we're still answering your questions. So Dan, over to you now.
Perfect, thank you. So yes, my name's Dan Brown. I'm a financial advisor, and I work for a company called Smith & Pinchon. We're independent financial advisors that work with both individuals and businesses. The reason why I'm here to talk to people is we've just heard about making tax digital from Polly. And for a lot of people, I've heard people saying that it sounds like more reporting, more software, more admin, more of a headache. And for a lot of people, that may be how they feel. But I want to put a bit of a different spin on it to say that making tax digital isn't just about compliance. It's about your visibility of your business, of your livelihood. And once you can see clearly your numbers throughout the year, you can start using sort of your income, your hard-earned income, to plan for the future, rather than reacting to a tax bill sort of 9 months after the tax year. So what we're going to look at is pensions. Pension planning is a useful way of dealing with your income tax liability. Obviously, we all pay tax. We pay income tax if we're employed or are a sole trader. With pensions, the government's incentive for people to set money aside for private pensions is to give the tax back on the contributions that are made on a personal basis. So when you pay money into a pension, you get the tax back at the rate that you would have paid it at. The caveat to say is, whilst you get income from rental properties, that isn't considered income for when you're making pension contributions. So there are some caveats to make. Like if you're making large pension contributions, approach with caution if you've got a rental property. But we're not here to talk about rental properties. We are here to talk to electricians. So with the quarterly reporting, you're able to see your profits and your income more frequently. And the questions to ask yourself is profit higher than expected? Are you in a better position than you were 12 months previous? And if you are, you can either have that money, or you can set that money aside in a tax efficient manner for your future. And that's where pensions come in. So pensions, people see them as different things, but it is money that you are setting aside for your future, because I'm sure nobody in the chat wants to be working past, well, depending on how active you are, do you want to be working past state pension age? Some people want to retire early, and that's where pensions can come in. So instead of having the March panic, we can have strategy planning meetings. So pension contribution can mean the ability to reclaim tax that you've paid, and just improving your tax position. And that's where life after work then comes in. You're setting money aside. There is the state pension that you'll be entitled to at an age, but as I'm sure many people have seen, the state pension is moving further and further away, and as a result, people are having to work for longer. Employed individuals, they will have a pension provision set, but for sole traders, the responsibility falls onto yourself. So putting money aside will benefit yourself over the longer term. In terms of of what is the right amount to set aside. That's a question that I get asked on a frequent basis. Or how much do I need to retire? Well, that's a really individual thing, and that's where we come in. We sit down and we work with individuals to find out what their retirement looks like, whether it's a case of working out what amazing things they want to do in retirement or what level of income that they want. And we do that through very many different ways. But as a part of this webinar, what we are doing is offering a free, no obligation meeting with myself or one of the team. It can be either face-to-face, telephone or video. And what we can do is we can start to paint a picture of what retirement could look like, or if retirement still feels quite far away, what we can then do is look at tax efficiency. It's not tax avoidance, it's being tax efficient to make sure that the money that you are earning is working for you behind the scenes. So hopefully retirement doesn't come at a really late age, that we can consider retirement earlier and you can enjoy your retirement. So if anyone wants to take advantage of a free no obligation meeting, you can either scan the QR code, contact me on the number below, or send an email. But yeah, today's not a sales pitch. It is just a case of highlighting that because you can see your figures on a regular basis, that allows you to plan for your future. And that's where a financial advisor can come in, whether it's ourselves or a trusted person that you already have. I'm now going to pass it back over to Candy to talk about their FSB and the amazing benefits that they offer. Yeah, across to you, Candy.
Yeah, thanks, Dan. Yeah, I think that's really important. I mean, we've obviously covered quite a bit around making tax digital, and we've got lots of questions that we're going to get through. I know sort of there might be some FSB members on the call. So just a couple of things really to highlight to you if you are an FSB member or considering FSB membership. FSB gives you unlimited legal advice, and that covers a variety of areas from health and safety to employment law, but also tax investigation as well. So FSB tax investigation is actually run by ex-HMRC tax investigators. You may have read in the news that HMRC is on course to recruit 5,000 new compliance officers to look at sort of the tax affairs of sole traders and small businesses. So if you are an FSB member, as part of your membership, your tax investigation insurance actually will cover you to be able to tap into a consultant who will essentially be your point of contact if you are involved in a tax investigation. They'll handle all inquiry correspondence and cover all of your accountancy costs as well, which is probably quite good news for you, Polly, to hear. It gives you unlimited tax advice as well. And 24/7 guidance. So as part of FSB membership as well, you get access to a resource hub of around 1,500 documents. There's downloadable guides, documents that you can change and edit for your business, and that's all within your FSB membership. Alongside that, you get free legal representation should you need it, cashback on business spending, debt recovery and late payment support, as well as discounted training in healthcare, and access to exclusive insurance renewal quotes for FSB insurance as well. And that starts from £195 a year, which is for a sole trader. So if that is of interest, have a look at FSB online or drop me an email, candy.richards@fsb.org.uk, and I'll be able to talk to you about membership in a bit more detail. So hopefully that's highlighted that there's lots of resources on hand to offer, and hopefully you've got a good idea now of what your requirements are under the new Making Tax Digital legislation. So what we're going to do now is move on to questions, because we've got quite a few. So Dan and Polly, I'll try and sort of field you the appropriate questions, but Polly, I think you're going to be guessing the bulk of them, just to say. So the first one we've got is, so we've got someone on the webinar who so they know what software they're going to be using, but what they're not clear about, if you can just reiterate, Polly, what do they specifically need to do before the 6th of April? For example, do they need to register for Making Tax Digital with HMRC, even though obviously they're not going to make that switch until April? So basically, we're here now, we're coming up to the start of March. What do they need to be doing?
Be good if I unmuted myself.
Yeah.
So the first thing I would do is check your 24-25 tax return. Is my income definitely over the 50? After which, if that answer is yes, I would make sure that I can access my government gateway, and it's the new gov.1 gateway that you need to access. Then after April, you will be able to enroll. So before the 6th of April, there is absolutely nothing for you to do. Just make sure you have your software that you've chosen is MTD compatible. So you might assume it is, but just double check that. Make sure you definitely have to enroll. Wait until after April, log into your gateway and press enroll.
Yeah, that's great. That's great, Polly. Thanks for that. And if you are an FSB member as well, there is Rhino Making Tax Digital software that you can access at a reduced cost as well. But also some of the other ones that you mentioned, Polly, would be great for them to look at as well. The next question is just around whether businesses really need to be making changes to the way that they invoice now. So we've got a question from Andy who said, my invoicing is via Word and email to customers, but then he also has buy-to-lets, which are managed by an agency. So essentially, can he carry on like this and then just enter the details quarterly through Making Tax Digital?
You've got a couple of options, Andy. You could do that and manually enter the details into a spreadsheet and then use bridging software. That's not the most efficient way, and that's not generally the way I would recommend. What I would recommend is making sure that your sole trade bank account, everything goes into one designated sole trade bank account, so you don't intermingle your personal expenses in there. No one needs to see your haircuts and your holiday. So just have one bank account that's just for your sole trade. Have another bank account that's just for your property income. Link those two bank accounts to some new digital software. Now that digital software can then fire off 2 MTD submissions every quarter, one for your sole trade and one for your property income. And then that way it will be a lot smoother for you than waiting until the end of your quarter, manually inputting everything into a spreadsheet and then trying to find some bridging software to work for you.
Yeah, so it's about thinking, how can we make this process less sort of time costly and as efficient as possible, isn't it, Polly? Yeah, got that.
Exactly.
So we've got another question through from John. John is on course to retire, hopefully in the next 18 months. Lucky John, we're all very jealous. So he is only testing sort of rented properties, really. And like I said, he plans on retiring in 18 months. Does he have a case to opt out of MTD? I guess, are you going to say it depends on how much he's making?
Well, first of all, it does depend on how much he's making. But secondly, even if he is over the £50,000 threshold,
Yeah.
if he feels that he qualifies under one of those exemptions, then call up HMRC, because it's an individual by individual basis. Call them up, explain the situation, and if you qualify for exemption, they will leave notes on your account to say that John is exempt. So they will take around 90 days to reply to you. So call them, explain the situation. They will then pass it through to that for assessment, and then they will write to you within 90 days.
Yeah, that's brilliant. And we've got similar questions coming through again, sort of people are on course to retire. So I guess the advice is phone up HMRC and see if you can be exempt. Okay, we've got a lot of questions coming through. I'm just skimming through. Does pension count as income? Don't know if either of you want to take this, Polly or...
Yeah, quite
No,
simple.
pension currently doesn't. Go on, Dad.
No, to be honest, I was feeling a little bit left out. I haven't said anything for a little while. Yeah, I was just going to say no, it doesn't. Pension doesn't count as income, and if you make a contribution, from my understanding, and please correct me if I'm wrong, Polly, it can't be offset against. If you had 50,000 income and you made a £10,000 pension contribution, you'd still have to do MTD.
Correct.
Yeah, brilliant. Polly, anything to add on that, or?
No, I mean, pension at the moment, when you receive pension, it's pretty much counted similar to PAYE income, like a job. So that's outside the scope of MTD.
Yeah. Okay, that's brilliant. So we've got some people who are watching who haven't actually used any software for accountancy yet. So the question is, can you just hand over your books to your accountant to then use the MTD software, or do you need to do it personally? Do you need to do it yourself? Is that requirement on you, or can you just get your accountant to do it?
No, you don't need to do it yourself. I would recommend you do it yourself because it helps with learning, but it also reduces how much you have to pay your accountant. Because if you're going to pass everything over and they're going to manually input everything into the software, then it's going to come at a cost to you. But with digital software these days, it's really easy. You link your banks and you take photos with your smartphone. What's not to like about taking photos?
Yeah, and Polly, I mean, obviously you sort of highlighted some of the software available. I'm guessing they've got how-to guides on their websites as well to help you sort of see how you use it.
Yeah, there will be loads of how-to guides. There's YouTube videos and quite a lot of accountants. I know we do. We offer face-to-face training with a screen on a computer screen on the board and just talk you through how to use a smartphone app to take photos and make sure it's downloaded, how to link your banks. We can do all of that. So you talk to your accountant.
Yeah, excellent. So obviously we've talked about the requirement, the frequent requirement now to report on your tax requirements, but will people need to pay their tax quarterly? Is it just a reporting, or do they need to pay tax quarterly as well?
At the moment, it is just reporting. However, the skeptic in me is thinking that they want to get everyone to report quarterly, and then ultimately they might try and introduce a quarterly payment option, a bit like VAT. So at the moment, no need to make payment quarterly. It's just a submission quarterly. Your payment deadline still remains the 31st of January, 9 months after the tax year. Yeah.
So that stays the same. It's the reporting. Yeah. One for me, actually. I've got a question for myself. Does FSB work for landlords? From David. Yes, David, we do actually. We've got a lot of members who are landlords. I am actually a landlord myself, although I often wish I wasn't. You get all the full protection under FSB, so you get the access to unlimited legal support. It actually goes even further for landlords. So the legal protection you get as an FSB member is unlimited. You can ask any question about any area. And if someone took you to court, you would get free legal representation. But if you're a landlord, it also covers you if you need to take a tenant to court over breach of contract or antisocial behaviour. So it's great, actually. So it's fully encompassing. And for £195 a year, even if I say it myself, fantastic value. So definitely sort of check it out, David, or drop me an email at candy.richards@fsb.org.uk and we can chat about that in more detail. Okay, so another question which is quite pertinent, actually. So even with the introduction of Making Tax digital, can the previous method of self-assessment be usable if you're not required to use Making Tax digital, if that makes sense? Is still running the same concurrently, Polly?
Yes, if you are not required to enroll and use Making Tax digital, then just continue as you are. Do one tax return after the end of April, before the 31st of January, and crack on as normal.
Yeah, that's brilliant. Thanks for that. Yeah, more questions again, just around people coming to sort of retirement age and, you know, the requirements, quite onerous retirement, and now having to use accountancy software. So like we covered already, contact HMRC. If not, look at some of these software programs that Polly has suggested, because they are quite intuitive to use. But we feel your pain, absolutely. Is this an advert for FSB has come through? No, it's not. But we're just here, obviously, to help you obviously understand Making Tax Digital, and obviously about the support from FSB. But, you know, apologies if it has come over like that. So I'm just looking through the other questions. So, okay, so Claire has asked us, if I'm doing my tax return sort of quarterly, why would I need an accountant to do it on an annual basis? Would she be better off holding all the information to then submit all her information at the final point? I don't know if I've explained it very well. So yeah, so basically, why would someone need an accountant to do a submission at the end of the year if they're using the Making Tax Digital to submit all that information trickling through the year? If that makes sense. Does that make sense, Polly?
Yeah, so Claire, ultimately, you don't need an accountant. If you are financially savvy and you're perfectly comfortable to do your quarterly MTD returns and then sum it up and do one final tax return, I wouldn't use an accountant. I encourage everyone to do it themselves ultimately, because it saves you money and it enhances your understanding of your business. So if you're comfortable doing it yourself, I would always suggest do it yourself.
Yeah, brilliant. So we've just got a couple of minutes left, I think, on our Q&A before we hand back to Sam. So we've got a really good question actually through from William. So the last 2 years, he sort of earned under 35,000 a year due to illness. But for 2 years before that, he did earn over 50,000, so sort of fluctuating income. So does he need to register looking forward sort of for the tax year 2026? He thinks he'll be sort of earning 40,000. So yeah, so if you've got someone who's had sort of, you know, sort of some sort of peaks in terms of the income that they're making, but are on course to and under the threshold, what's your recommendation, Polly?
So William, it's not really subjective. You just have to look at your 24-25 tax return. Is the income in that more than 50? If it is, you have to enrol. If you then fall under 50 for the following year, you might still have to enrol because next year's threshold falls down to 30. And then the year after that, it falls down to 20. So ultimately, anyone who earns more than 20 income, £20,000 income a year, is going to have to enrol within the next 2 years anyway.
Just probably time for one more. I know Sam's thinking, come on, Candy, you know, you need to wrap it up. But I think we could probably be here all afternoon, couldn't we? There's so many questions, understandably so. So we've had a question around sort of getting hold of HMRC, and I know that we've had a lot of members report that there have been some sort of really big delays in sort of getting through. Polly, is there any other way to get hold of HMRC apart from, I guess, ringing them?
You could try post. Whether it gets answered or not is another question. But a tip, because as you can appreciate, we call HMRC all day long. The two things: ring them, but do something else in the background whilst you're waiting, because you could be waiting upwards of an hour, or ring them at 8 a.m. Now, that if you do that, there's a strong possibility you get through within 2 minutes.
Brilliant. That's really good insider knowledge. Thanks, Polly. big apologies if I haven't managed to ask your question. We have had a lot through, but like I said, do please sort of track me down, or Dan or Polly, and ask us your questions directly. Obviously, or Sam, I'm sure you're willing as well, aren't you, for people to come to you directly to ask any questions that they've got that are outstanding. I'll hand over to you, Sam.
Okay, that's great. Well, firstly, really big thank you to Candy, Polly and Dan. Really knowledgeable, really informative. And as Candy said, obviously with the imminent arrival, it's generated a lot of questions. So yeah, hopefully we answered as many there as we could. And if we have any follow-ups that are needed, we'll certainly get round to doing those as well. So yeah, thanks very much, Candy, Polly and Dan. Great input, really knowledgeable, really helpful. Just before we go, I just want to remind you, we do have another couple of wire webinars coming up in this series. Actually, later this week, on Thursday night at 8 o'clock, we've got a very popular EICR coding clinic where we'll be looking at recommended classification codes for typical examples of issues and observations made on electrical installations. And then in a couple of weeks' time, just before Amendment 4 is published, we're going to just have a bit of a recap of how our British standard BS 7671 is produced and published. So please, if you haven't done already, pop onto the website and register for those wire webinars. We'd love to have you live, and of course you can always watch them on demand at a later date as well. So I will just remind you again, we will, as part of the outtake, do a small survey. It's literally 5 questions where we're asking for some feedback. It really helps us because it helps us know, did we hit all the right marks on this one? And also it helps us to decide on subjects and issues that you want covered in future episodes. So yeah, just a final thanks again to Candy from the Federation of Small Businesses, from Polly Lee at Lee P Accountants, and Dan Brown at Smith and Pinchin. Thank you very much for your help, and hopefully we'll see you again soon.